trading taxes in Canada. How exactly do you do it? And can you trade with a TFSA account? Since I'm a proud Canadian trader, I've gotten tons of questions and comments on how do we do taxes for day trading income here in Canada, so we do not, God forbid, anger the CRA, Canadian Revenue Agency. And trust me, you do not want the CRA going after your ass. Before we start, here is a mandatory disclaimer. I am not a CPA nor a financial advisor. I'm not licensed. I don't know anything about taxes. Everyone's tax situation will be grossly different. It's your own responsibility to ensure all your taxes are filed correctly and legally by a tax professional. I have no idea what I'm talking about. I'm bad at math, and I didn't even get straight A's in high school. Okay, I lied. I totally did get straight A's in high school. But just A's though, not like A+. And if you're Asian, you know that A's stand for average. I've never actually prepared and done any of the taxes myself. I've always consulted my CPA every single year to do the taxes for me. But for the purpose of this highly requested video, strictly for entertainment purposes of course, I booked a business tax consultation appointment with my CPA to discuss day trading taxes in Canada. So this video is simply just what I learned after the 1-hour consultation session. It's not meant as a financial advice nor tax advice. You should always talk to a tax professional when you're filing your taxes, especially when it comes to something as complicated as day trading income, whether it should be counted as capital gains, which is only 50% taxable, or as a business income, which is 100% taxable. This video you're watching right now really took a lot of time and money to make. I had to pay for a business tax consultation session with my CPA, prepare my own notes and do my own research with questions, and then take notes throughout our 1-hour session at her office. All of that just to make this 10 to 15 minute video. So if this video helped you out in any shape or form, or my bad jokes are so bad that you laughed just a little bit, all I ask is for you to drop a like on this video. That would really mean the world to me and make that expensive tax consultation session well worth it. So, is trading income considered capital gains income or business income? This is perhaps the biggest questions many Canadian traders have. Because business income is just like your employment income. Let's say you made $10,000 from trading, and that's considered business income, and you're in a 20% tax bracket. That means that you have to pay the CRA $2,000 in taxes, and your take home is only $8,000. Whereas if you were filing that same $10,000 trading income as capital gains, then only 50% of that income is taxable. So you would pay 20% tax rate on only $5,000. So that equates to paying the CRA only $1,000 in taxes, and you get to keep the remainder $9,000. To answer that important question of whether your day trading income should be considered business or capital gains, you first need to find out whether you qualify as a professional day trader or an investor. And no, you cannot just decide that yourself and report only 50% of your trading income just because you say so. Life doesn't work like that. It has to be under the almighty CRA's rules. Whether you qualify as a day trader or an investor, it's mostly defined but not limited to these 4 factors. How often do you trade, how long you hold the securities for, the amount of time you spend on trading and studying the market, and how substantial your trading income is. So for the first 2 definitions, when we're day trading, we're buying a position and selling it really quickly within the same day. That's why it's called day trading, not monthly or weekly trading. As a day trader, I do participate in the market every single day that the market's open. Most days I make more than 10 trades a day, but there will be days where I make more than 30, 50, 60 trades or even more, because day trading is my business. Whereas if I was an investor, I would probably only be making 1 to 5 trades per month. Maybe I'll be placing an order to buy some Tesla shares a couple of months ago when the stock crashed below $200, and perhaps I'll be selling those shares right now when Tesla just reported earnings beats and breaking above all-time highs at $600. An investor who is claiming capital gains isn't making buying and selling transactions every single day. He or she is likely holding the securities for a much longer period of time, sometimes for weeks, months, and even years. Because that security is meant as an investment for the long-term growth of a company, not just a trading vehicle for him to take advantage of the short-term price fluctuations. Now, for the third question, how much time do you spend on trading or even just studying the market? A day trader, by definition, is most likely spending the majority of his or her time in front of a computer, following all the news, staring at each tick on the candlesticks on their screens, and alone at home, in front of a table full of smokes, beer cans, and drowning in hilarious social media comments and rejections on dating apps. Oh wait, that's just me. Generally speaking, a day trader would be spending the vast majority of time studying the market, like I do. Like I mentioned in these two videos, I spend 2 hours before the market opens preparing for my trading plans, and I'll actively trade for the first few hours of the open and near the market closes. And I'll put in an extra 2 or 3 hours in the evenings studying the market as well. So that amount of time a day trader generally spends on the market is equate to a normal 9 to 5 or 9 to 7 job, because they are in the business of profiting from the volatility on a daily basis. Whereas if you were an investor, you probably spend the majority of your daily hours on your employment job or your other business not related to trading. And you would only have a couple of hours on the weekends or on a monthly basis for you to catch up on the market and look for potential buying and selling opportunities for your long-term investment. The fourth factor the CRA takes into consideration when looking at your trading income is whether you click the like button at the bottom of this video. Sorry, I just had to do it. That was like perfect opportunity. So the fourth factor the CRA looks at is how substantial your trading income is. Now this one factor, in comparison with all the other three I mentioned earlier, it's a little bit of a gray area, because how the word substantial is defined is almost always gonna be different for each individual. Let's say you're working a full-time job as an engineer making 120 grand a year, and you make $10,000 from day trading just 2 days a week before you go to work. That trading income of $10,000 may not seem substantial in comparison to your full-time employment income. However, if you were a stay-at-home parent or if you were a student and you don't have a full-time job or any other sources of income, you day trade and make $10,000. That trading income will be more likely to be considered substantial under the CRA definitions. So that's why all our tax situation will be grossly different. It's important to talk to a tax professional regarding your own personal trading income. You may have realized by now, yes, I am a full-time day trader. So that means 100% of my income is considered business income, and they are all taxed at my full marginal tax rate. And I have a feeling if you're watching this video, you probably have to file your trading income as business income as well. Just saying. But hey, filing your trading profit as business isn't really that bad. Well, besides paying more taxes than you and I had hoped for. Because there are pros and cons to filing either as capital gains or as a business. So let's talk about filing as capital gains first. If you are a long-term investor or a casual swing trader who met the 4 factors we mentioned earlier, the advantage of doing so would be, of course, only 50% of that income will be taxable. But the biggest disadvantage is that you cannot write off any of your business expense against that capital gains income. So no trading commissions, borrow fees, no equipment write-off, nada whatsoever. You can only write off your capital losses against your capital gains. So let's say you had some capital loss from real estate of $2,000. So you can write that off against your $10,000 capital gains from the stock market. So your true capital gains will be $8,000, and only 50% of that will be taxable. Another thing to remember if you're filing capital gains is the superficial loss rule or the 30-day rule here in Canada. That means if you sold a stock for a loss and you buy it back within 30 days, you cannot claim the loss for tax purposes. This rule, of course, is in place to prevent investors from manufacturing a loss in order to claim tax deductions on their capital gains. So make sure to keep that in mind. Now let's talk about filing your day trading profit as a business income. You'll be likely filing that under self-employment or as a sole proprietor. And yes, that means 100% of your trading income is fully taxable instead of only 50%. But the amazing advantage of filing as a business income is in the tax write-offs. Almost anything that you're using to make your day trading profit can be claimed as business expense against your income. That includes your broker commissions, scanners, news alerts, trading DVDs, your internet bill, and even part of your mortgage or rent if you work from home. So the money I spend every year on Trade Ideas, Benzinga, and the super powerful computer that everyone is complaining in the comment section that I don't actually need, these are all tax write-offs. Legally, of course. And another sweet advantage is that 100% of your any other business losses can be written off against your trading income as well. So let's say you made $10,000 from trading, but you lost $2,000 from your Lamborghini rental service because apparently Lambos suck. And I like my Civic more. Your true taxable business income would be $8,000. And the same thing works the other way as well. You can write off your trading losses against your other business income. If you made 100 grand from employment income and another $10,000 from trading, when you file that under capital gains without any tax write-offs, you pay $27,669 in taxes here in BC. Whereas if you don't qualify to file as capital gains and you file that as self-employment income, you pay almost $2,000 more in taxes. But remember those sweet write-offs I mentioned earlier? Let's say you spent $3,000 on DVDs, broker commissions, and computers this year. You can write that $3,000 as expense against your $10,000 income, so only $7,000 of business income is taxable. And you'll be paying $28,435 in taxes. So in comparison to filing as capital gains, it's really not that bad. Okay, it's pretty bad actually. Who am I kidding? That's like almost $1,000 of difference. That's 76.92 bowls of Japanese ramen that we could have bought right there. Now that we're talking about day trading as business income, another topic that's really important to make note of is trading in your TFSA. I get asked this question a lot. Can you trade in your TFSA account? The quick and easy answer is no. If your trading behavior, according to the 4 factors we talked about, constitute as business income. TFSA account stands for tax-free savings account. It's meant for you to use as personal savings and investing, not to be used for business activities. There has been instances of the CRA challenging individuals' TFSA account in court because they assess their trading activities within the TFSA account to be closer to business income rather than investing or savings. But if you have talked to a CPA regarding your TFSA activities and they think that it's closer to investing, maybe you just swing trade once or twice a month and you still have a full-time job, then there's nothing to worry about using your TFSA account. Again, whether you are a day trader or a swing trader, the most defining factor that tells the CRA whether your trading income should be capital gains or business income is first, how often you trade and how long you hold the positions for. Each buying and selling activity that you perform on your broker is recorded on a T5008 form, which is a tax form that records your name, social insurance number, the kind of securities you bought or sold, and the dates of those transactions. And yes, you already know the CRA will have access to the tax slips. Again, it's up to you to talk to a tax professional regarding your situation. Do not sheep out on this. Paying taxes means you're making money. It's a good thing. If you want to live in this amazing country and enjoy all the social benefits, then you should pay your dues. Again, you do not want the CRA going after your ass. If this video helped you out and clarified some questions you had regarding day trading taxes in Canada, please remember to drop a like and subscribe to see more day trading content on this channel. Thank you guys so much for watching as always. I'm the Humble Trader, and I'll see you guys next week.